Hey, what's up, my friend? Welcome back to this week's market analysis. All right, it's great to have you. So, in today's video, what I want to talk about is about being in control. Right? An example, last week I posted a call on silver, right? I said I was looking to long, and I believe some of you took the trading setup who lost money, and some of you who took the trading setup and made money. Why is that? Why is that? The same trading setup that is being posted, a group of traders lost money and a group of traders made money. Why? And the reason is because traders who made money are in control. They have a trading plan that they follow, right? And chances are those who lost money don't have a trading plan. So how do they manage their trade if you don't have a trading plan? Chances are is that when you see the market go against you, you get frightened, right? You start to, have thoughts like, oh, this trade is going to be a losing trade, right? I better, exit my trade quickly before it goes further against me. So you quickly bail out your trade. Chances are this is what a trader with no trading plan would do. And this is what I mean by, being in control, right? If you are trading without a plan, you can't stay in control of yourself. And when you are not in control, you are going to make very poor decisions in the market. And so in today's video, I'm going to share with you step by step on how to actually develop your own trading plan so you can stay in control of yourself while trading the markets. Okay? Plus, I'm going to share with you this potential setup on this market that's looking set to break out higher into its all-time highs. So all this and more in this week's market analysis. I'll see you there. Okay, so the first market I want to talk about is actually silver. So just a brief recap on why I went long on silver, right? I said I went long on silver because price, well, let's be honest, it was in a long-term downtrend for over the last few years. And in recent weeks, right, the bullish price action actually made me decided to be a long bias, right? Why is that? Because if you look back historically, we have a series of lower highs, lower highs, lower highs, lower highs, lower highs, and then equal highs. Then we have lower lows, lower lows, lower lows, lower lows, higher low, and a higher high over here. So once you see that, right, it's telling you that, the long-term downtrend is, starting to be weak or even, be in a neutral territory where, because you can actually conclude that this is pretty much in a range. Let me draw this out. In the range between these highs and these lows. So you can say that, the long-term downtrend, right, is starting to get weak. And if there is opportunity to go long, it will be a fair setup because you have a series of higher highs and higher lows. And looking at the daily time frame, this was where the opportunity came in, right? You have a series, you have an area of resistance over here, right? Price got rejected here once, twice, thrice, and then price broke out of resistance, came back, retest, previous resistance becomes what? Support, right? Now here's the thing, right? I didn't went long just because price retested this previous resistance turn support. Because honestly, this zone can be pretty large. It can be anywhere from, say, this highs over here and maybe up to this lows over here. I have no idea which part of the zone price is going to reverse. Could it be reversing near the top portion over here or towards the low over here? I have no idea. So what do? I let price tell me, right? And where it tells me is that when price formed this bullish engulfing pattern over here, where you have a higher close over here telling you that the bulls are in control. So this was where I got long. I shared with you last week as well. I said I'll go long on the open, right? Stop loss below this low. So at this point in time, right, I believe there are traders who watched this video last week, right? I think more than 1,000 of you who would also, take this similar setup, right? And there will be some of you who lost money on this trade, some of you who broke even on this trade, and some of you who actually made money on this trade. Why is that? Let me explain. Let's assume for now that, we do not know what happened. Say, for example, this 3 candles over here, right? Let's ignore it. But let's focus on these 2 candles over here. Let's say you went long with me on Monday, stop loss below this low, and the close on Monday was bullish, right? And you tell yourself, okay, I am not going to lose money on this trade, right? I don't want to let my winner become a loser. I'm sure you heard this mantra before, right? Do not let your winner become a loser, right? So what do? You set your trade to break even, right? You quickly set your trade to break even because you don't want to take a loss on this trade, right? This is actually the fear of losing that caused you to do this. So if you set your trade to break even, chances are is the next day you got stopped out at break even. So that's the first group of trader. The second group of trader is this. They didn't set their trade to break even, right? But instead, what happened is that at this point in time, right, this candle over here, at one point in time, it was actually looking very bearish. So again, you give in to your fears because you're thinking, oh my, it's looking so bearish. Chances are I'm going to be stopped out of my trade if price trades towards this low over here. So why not let me quickly exit the trade so the loss is still very small. So you take a small loss. So the second group of trader, they took a small loss, right? And now there's this third group of trader, and I hope you're one of this group of traders where you tell yourself, right, okay, I know what I'm trading. I'm following my trading plan. I went long over here. Stop loss is at this low over here. So I know that potentially this is an area where sellers may come in. So I'll be looking to exit my trades when price trades into this area of resistance or swing high, right? So this third group of traders will be in profits right now because they just follow their plan. They tell themselves, right, sellers would be coming over here, and this is an area, if price trades lower, would tell them that they are wrong on this trade. So they let their trade play out the way it is. They didn't go and micromanage or give in to their fears. And this third group of traders, chances are they would exit with a profit on this trade. So can you see that, how having a trading plan is so important? Because if you are micromanaging your trades, pretty much all the time, you're not going to give it the ample breathing room it needs to do what it needs to do. Okay, so a trading plan is really, really important. And later, towards the end of this video, I'll just walk you through how you can actually go about develop your trading plan, right? So this is the market on silver, and I want to share with you the importance of, learning how to manage your trades, right? You can see that some traders made money, some lost money, and some, just break even. Okay, so this is silver. Another market I want to share with you is actually this one over here, the Bund. This is the weekly time frame, and it's really, really bullish, right? If you look back historically, it has never traded at this high before, right? Look at the monthly, it's at multi-year highs at this point in time. Or it's going to trade into the all-time highs. So at the daily time frame, it looks something like this. This is the area of resistance, area of support. So for me, I'm bullish on the Bund, needless to say, right? If you can break and close above this high over here, I'll be looking to go long on the Bund. And then some of you may say, Rain, are you crazy? You're going long at such a high prices, right? Why don't you wait? Why don't you just wait for price to come back lower to retest this swing low or this area of support? Wouldn't be that a much better trade? And I agree, right? That is a much more favorable price that I could get. But the problem is, what if it doesn't retrace? What if it doesn't come to this area that I'm waiting for? And I potentially miss this big move higher if it does, break out and, trades for the next few thousand ticks, and I miss the entire move because I was just waiting for price to retrace to this high, to these lows, or to this area of support. Could I take it? Well, to be honest, I can't take it, right? And so this is why I would pretty much rather just go long on the breakout. If I'm wrong, I'll just exit the trade. And to be honest with you, I have no idea whether this is going to lead to a large move in the markets, because chances are one of two things is going to happen. Number one, price came into this area of resistance and it breaks out nicely, and I get a big winner on this trade. Alternatively, price comes into this area of resistance and does a false breakout, and I take a loss on this trade. Right? That is probably the only two scenarios that could happen. And I have no idea which scenario will happen. I have absolutely no idea. Right? So this is why I say that there are different ways to trade the markets. For trend followers, trend traders who want to trade the breakout and ride the trend for all it's worth, that is a viable approach. And similarly, alternatively, right, another group of traders who likes to trade reversals in the market, right, to take a swing out of it, they go short at this area of resistance, right, and look to take profits at this lows over here or this lows over here. That is fine as well. That is a possible approach as well. So it's really about understanding what is your trading approach and then sticking to it, right? Don't be all over the place, right? One moment you're trading breakouts, one moment you're trading counter trend and stuff like that. I think honestly, your trading is going to be a mess if you have no idea what you're doing. Right, so I'm going to share with you. I just shared with you my plan. Right, I'm looking to trade this breakout and to see whether I can ride a trend out of this trade. If I can't, take the loss and move on. And I think this is pretty much what I've been repeating over the last 40, 50 videos. Okay, so this is the setup that I'm looking at into this coming week. And before I end it off, right, in today's video, I just want to walk you through about how you can go about developing your trading plan, because I think this is such an important aspect of trading that most traders neglect. Right? Most traders, they know, they like to drop me a message, say, hey Rainer, I'm long this trade right now. Should I exit my trade or should I hold it longer? Right now I'm in a loss. If I cut my trades, what if it goes back in my favor and I exit at a very lousy price? What next? And the problem with this is that you're not trading, you're gambling, right? Because you are basically making decisions, based on the results that the market is giving you right now. Right? You're making decisions based on your fears, your emotions, and stuff like that. And in the long run, There is no way you can make money by trading based on your emotions. What you need to do is to have a trading plan. And I say this a lot of times, have a trading plan and follow it. It doesn't matter whether your trading plan makes money or lose money, because from there, you have something objective that you can work with, improve on it, tweak it into something that is profitable long term. Okay, so let me walk you through how to actually go about developing your trading plan. Number one, you need to know what is the time frame you're trading. Right, whether you're trading the daily or the hourly time frame, the 4-hour and stuff like that, right? You need to define the time frame that you're trading. If you have a full-time job, doesn't make sense to be trading off the 15 minutes time frame. That is pretty much suicide, right? Financial suicide. Stick to the 4-hour or the daily time frame would make more sense if you have a full-time job. Number two, what markets are you trading? The currency markets, the futures markets, the bond markets, the indices, stocks, blah, 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 whatever. You need to define the scope of the markets you're looking. Right, for me, I'm a trend follower. I trade across both the forex and futures market. You need to know what are the markets you're trading. Maybe you don't trade so many markets as me. You just focus on the major currency pairs: euro dollar, Aussie dollar, pound, dollar yen, and stuff like that. Right? Know what are the markets you're trading. Or if you're trading stocks, which sector of the stocks you're trading? Which particular stocks? Is it the mid cap, the blue chips, and stuff like that? The third thing, right? Your risk management. How much are you going to risk on each trade? For me, I keep saying many times over, I risk 1% on each trade. Right? And this is really dependent on your own tolerance for risk. Some traders risk 2%, some 0.5%. Again, you're not me, I'm not you, right? It is pretty much something really personal. Number four, this is important. Conditions of your trading setup. This means that you need to know what you're looking for in your trading setup. Are you waiting for price to come into this area of support, and then maybe you look for a candlestick reversal pattern before you get long? Or maybe you're just, look like me, like looking to trade a breakout. If price closes higher, you look to get long. Okay? And let's say another condition is that, if you want to go long, price has to be above the 200-day moving average and stuff like that. You need to know what is the precise condition to get long or to go short in your trading. Number five, the entry, right? How will you enter? Are you going to enter with a market order, a limit order? You're going to wait for a candlestick confirmation? How are you going to enter the markets? Number six, you need to know where to put your stop loss, right? You are definitely going to be wrong many times in your trading career, and you want to limit the damage should you be wrong. So where are you going to put your stop loss? Right? The stop loss will get you out of your trade when the market turns against you. And last but not least, you need to know how you're going to exit your trade if you're right. You can call it a profit target and stuff like, or trailing stop loss and stuff like that. Where are you going to exit your trade if you're right? If you're a trend follower, you look to trail or stop loss. Could it be based on structure of the markets? Could it be based on moving average? Or if you're a swing trader, you'll be looking to take a swing in the market. So which are the swing levels in the market where you want to exit your trades? So these are the 7 questions that your trading plan must have. Number 1, the time frame. Number 2, the markets you're trading. Number 3, how much risk you're putting on each trade. Number 4, what is the condition for your trading setup? Number 5, how will you exactly enter the trade? Number 6, your stop loss. And number 7, how to exit your trade if you're right. Okay, so I've covered quite a bit, right, in this week's market analysis. I think it's somewhat of an analysis. It's somewhat of a little bit of lesson along the way. But I hope this really gives you a foundation to work with in your trading, right? And I can say, right, this is very often why most traders fail, because they're trading without a plan. They're just trading based on rumors, tips, social media. That trader is long, I'm going to follow him as well based on his track record, blah, blah, blah. And what happens after which is that, your account just deplete day after day, and you have no idea what went wrong. You have no idea how to improve. You have no idea, whether the trading is for you. Right? I'm sure you have thoughts like this, right? So get a trading plan. I've just shared with you step by step on what your trading plan should look like. Okay? So that's it. I've come to the end of this week's market analysis. If you've enjoyed this video, feel free to hit the subscribe button below. And if you have any questions, any comments, let me know in the comment section below. With that, I wish you all good luck and good trading. I'll talk to you soon.